Dhirendra Kumar of Value Research is now with us. And Dhirendra, you've said that, there have been a set of fundamental groundbreaking changes on regulations governing mutual funds, like we've just seen with this new rule with the MF expense ratio being cut. And he said it's a strong sense of deja vu that you're getting. Why is this? And can you just help us, help break down what this cap on fees is going to mean for the industry?
I think, more than the cap on expenses, the critical thing that we see is, that I see is, alignment of interest of investors at the core of it, and the fund management company and the distribution. Because, so far, the business has been structured in a manner that investors benefit when they spot a good fund, invest regularly, or, they invest and their investments do well. Fund companies benefit if they get investors' money and it remains with them, and they continue to manage it well. But the intermediary used to benefit from, what Ashish was saying is that, there will be a problem with people gaining entry into the business. Agreed. But this, upfront commission is the real problem which causes all kind of, mis-selling or opportunity, because that is a misalignment of interest. Everybody makes money by managing money or getting his money managed well. But here is a person who gets money just by, getting money and moving the money around. This was a misalignment. This has been done away with. This will cause a difference. This will change. This will drive one of the most significant change in the distribution business. That apart, I think I also have a sense that, right now it looks like a massive blow, but mutual fund distributors will have a far significant case, because the difference between the, over time when people will question that what is the difference between the regular plan and the direct plan, it will get very well defined. It will also be, overall expenses coming down, they will still be relevant. If these differences are large, and if, if the overall expense itself is very high, then I think that is a long-term problem for the sustainability of the distribution business, which I think will gain. They will have to achieve scale. They will have to become relevant. And I think they will economically, the difference will be not large enough over time to for them to, defend their case that why they're still relevant.
Dhirendra, you were part of the committee that was behind taking this decision and, capping the expense ratio. Tell me, will there be a further cut in the mutual fund expense ratio? And broadly, are we moving at par with our global peers?
No, I don't think there will be a further cut. But these are, because if you look at the recommended system, it is a very dynamic system, and SEBI was very clear, the SEBI representatives in the committee, or the SEBI people in the committee were very clear that, investors should benefit from the scale which mutual fund companies are able to, or different funds are able to achieve. And a good part of that scale will be reflected in that. I don't see a further correction, further reduction in the expense ratio, and it is a good problem to have. If you achieve 50,000 crore asset base and you make 1.1%, it might look small, and this will actually alter the way the trail commissions are structured, the way management fees earned, and this will provide great scalability to the industry, to the distribution business, and I don't see a further cut.
Okay, you were just talking about the big change being that outlawing the upfront commission that the distributors get for getting investors to put money into a fund, and that trial commission as well. Can you just elaborate a little bit more as to what exactly this is going to mean?
It means that, distributors will not get money for raising money. They will get money only for when the money remains invested. So they will not have any incentive to move the money around. Today, mutual fund agents, they get money when they raise money, and then after that, they also get money on a continuous basis depending on the scale of money that is invested, maybe 0.5%, 0.75% or 1% on a continuous basis. And the result of this will be the upfront commission which they used to get, whether it be 1.5% for raising, a crore of rupees, so you earn 1.5 lakh upfront, and if that crore of rupees remains invested, then you still earn 75,000 rupee or 1 lakh rupee every year till that money remains invested, and maybe more money if the money does well, if the investment does well. But the problem was that after every year, you can move that money around you can move that money from one investor to another, and you will earn 1% more, and once again, and may not necessarily be in the same fund company. This does not benefit fund companies. This does not benefit investors. So that particular anomaly has been done away with. This will look like a massive blow at the outset. I agree that this will create a barrier in terms of a lot of people getting started and making a viable practice out of financial distribution. But every business requires some incubation period and capital.
Dhirendra, just a quick word as to, given the fact that the expenses charged have also been slashed, does this work to the advantage of some of the smaller funds?
It does. It is actually, for the first time we are witnessing a change which just might benefit smaller funds. And, the reduction is not actually, yes, as the fund gets very large, there is a reduction. But if you look at, there is actually an increase in the income. If the slab's getting increased from 100 crore, the first threshold scale for increasing or lowering your expense was 100 crore. Then the next 300 crore, then the next 300 crore. That has undergone a change. Now, up to your first 500 crore, you can charge higher fee. I think, we are missing the point. It is not lowering or increasing the expenses. The lowering of expenses, as you get very big, I think most fund companies will realize that they will have to reconfigure, rejig their business model, and it is a good problem to have. Most fund companies will still yearn to become 50,000 crore funds. The real thing which I think in this SEBI change rule is abolition of entry load, which will align everybody's interests, and making expenses transparent, which was not so far, and we will see the direct fallout of that will be direct PAN expenses will come down.
Right. Thanks very much, Dhirendra, for joining in with your assessment of what exactly this means.